Good day, everyone. I'm here to bring you the latest developments in the world of cryptocurrency and blockchain technology over the past 24 hours. From groundbreaking announcements by fintech firms to political maneuvers and economic trends, we've got a packed report today. Let's dive in. First up, there's significant buzz in the crypto space about market sentiment and major token movements. According to posts circulating on social platforms like X, the Crypto Fear and Greed Index has recently dipped into the fear territory, signaling a cautious approach among investors. This comes amidst reports of large-scale transactions, such as a major capital management firm moving substantial amounts of a leading stablecoin between prominent exchanges and decentralized finance platforms. While I won't quote exact figures, these movements suggest a strategic repositioning, possibly in response to repayment obligations or market rebalancing. This could be contributing to the jittery sentiment we're seeing as investors weigh the implications of such large transactions on market stability. Shifting to political developments, there's growing attention on regulatory frameworks for cryptocurrencies. Recent posts on X highlight the passage of a bipartisan bill in the U.S. Senate aimed at regulating stablecoins. This legislation, often referred to as a significant step toward mainstream adoption, is seen by many as a move to instill trust in digital currencies by providing clearer guidelines. However, some voices in the crypto community express concern over certain provisions, or lack thereof, that might not fully address issues like potential conflicts of interest at the highest levels of government. If confirmed, this political move could have a stabilizing effect on markets in the long term, though short-term volatility might persist as details unfold. The relationship here is clear. Regulatory clarity often boosts investor confidence, but the uncertainty during the legislative process can lead to market hesitation. On the economic front, there's ongoing discussion about broader indicators impacting crypto markets. Posts on social platforms mention warnings from prominent financial figures about critical economic signals that could influence risk assets, including cryptocurrencies. While specifics vary, the consensus seems to be that global economic tensions, such as geopolitical conflicts in key regions, could drive volatility in oil prices and, by extension, affect investor appetite for speculative assets like Bitcoin and Ethereum. We've seen in the past how macroeconomic uncertainty tends to push investors towards safe haven assets, often at the expense of cryptocurrencies. This could explain some of the downward pressure on prices noted in recent market analyses available on the web through sources like Cointelegraph and BN Crypto, which point to a steeper decline in some major altcoins compared to Bitcoin over the past day. Turning to innovation and fintech announcements, there are exciting updates from the blockchain sector. Reports gathered from crypto news outlets like CoinDesk and posts on X indicate that several firms are making strides in tokenized finance